BlackRock CEO Larry Fink admits he was wrong about Bitcoin as BlackRock reaches a historic Wall Street milestone, all thanks to this token for criminals.
IBIT is now over $100 billion.
I know, from nothing not that long ago.
And 2 years ago, zero.
Yeah,
so
I know. Well, you weren't always a huge proponent of crypto, as we know.
Yeah, but
love it now.
But I grow and learn.
I heard you say that on 60 Minutes.
What a knee slapper. And on the back of this, Jamie Dimon admits that JPMorgan is going to get into allowing Bitcoin trading for their clients and customers. And Citibank confirms they're getting into the Bitcoin custody game in 2026. And over the last few months, we've heard about sovereign nations approaching institutions like Binance and Bitwise, saying that they're going to be buying Bitcoin.
We have countries, sovereigns, starting to do allocations. We have just announced Kazakhstan, working with Binance, Kazakhstan, starting their own strategic reserve on that front. So we have different countries approaching us.
And while this sounds good on the surface, people are unaware of what's actually happening. These institutions have the sort of plumbing and mechanisms to suppress the price of Bitcoin. And I believe that's exactly what they're doing. Today, we're going to walk through the big banks and Wall Street's plans to suppress Bitcoin's price. It's happening right in front of our eyes. This is Dante Cook with Bitcoin Simply. Let's go. Okay, we've probably all seen this clip by now. This is a clip from Uncle Larry, Larry Fink, the CEO of BlackRock, admitting he was wrong about Bitcoin and that markets taught him a lesson.
I did say Bitcoin, because we were talking about Bitcoin then, was the domain of money launderers and thieves. But, the markets teach you have to always relook at your assumptions. There is a role for crypto in the same way there's a role for gold. That is, it's an alternative. For those looking to diversify, this is not a bad asset.
With BlackRock's IBIT, its Bitcoin ETF reaching $100 billion faster than any other ETF in the history of Wall Street, it's clear about why he's promoting Bitcoin on national television and always talking about the future of finance and the tokenization of blockchain. And there's a clear signal, not only from institutions but sovereign wealth funds, that they are wanting to acquire Bitcoin. Here's a clip from Hunter Horsley from Bitwise at the recent 2040 conference in Singapore.
So what do I mean by that? We're chatting with a sovereign wealth fund who's interested in buying Bitcoin, but it's going to take them about 6 months to get through the process. So they own shares of MicroStrategy now. We were just approved at a $1 trillion bank in the US, their wealth management division. It's the first time they have access to a Bitcoin ETF. A lot of them have used DATs. MicroStrategy and others to get exposure.
People are looking for ways to get exposed to Bitcoin. But what happens when these groups get involved in an asset class, an early asset class like Bitcoin, and one that they can't control? Well, they apply the tried and true Wall Street playbook to these new assets. If they couldn't control it early enough, or if they can't FUD it out of the way, well, they try to manipulate it. And here's an example of this that I believe is happening right now in real time. The mysterious trader who made $190 million in profit the other day by ironically shorting Bitcoin just before Trump made the tariff announcement, well, they've now opened up $500 million in shorts against Bitcoin. And you know that this isn't just an individual. You can't just short $100 million worth of an asset naked because you need the backing of institutions to do this. This is clearly being funded, collateralized, or supported by a major bank. These flows don't just happen at the retail level. They happen at the institutional level. And what they're doing is they're intentionally influencing the algos and retail traders, who when they see Bitcoin start to go down by a little bit, panic sell, and they actually capture a wide profit margin because they're naked shorting with leverage. This is the long-term plan. This is what Wall Street does to other assets that they want to control. Listen to this clip from a great conversation between Goldfix and the TFTC crew.
Bitcoin was becoming a threat, whether it's made by someone or not, I don't care. It has a life of its own now. It is a Trojan horse in many ways. And what the US does, not all governments, what the US does is it will, if it catches it early enough, it'll kill it, the threat to the dollar. If it doesn't catch it early enough, it'll just use rhetoric and propaganda and FUD it. And if it survives that, then it will actively attack it. Maybe like a CIA assassin goes out to kill Bitcoin. I mean, you get my point, like a regime change. And then if it can't do that, and this is where the US is really smart, it co-opts it. So when you create the ETFs, I I know that people do not value the liquidity network that the US has big enough. And so I'm going to exaggerate, but I'll make a point. 70% of all the Bitcoin transactions were outside of the US. The liquidity was not in the US. You create, finally, the spot Bitcoin ETF, and without doing anything intentional, without funding it, without manipulating it, you make the liquidity pool the US. And so the US may not own the Bitcoin, but the US controls the Bitcoin. You raise margins, you change T2, all these things, and you control the liquidity pool. So if you can't kill it, you demonize it. If you can't demonize, or vice versa, you co-opt it. So what the US does is it takes everything it cannot control. Like you can write a paper on this. Everything it cannot control, that's an outside force, and it co-opts it. And that's what we did with Bitcoin.
This is the government co-opting Bitcoin, and they're doing it through the large players, JPMorgan, Citibank, BlackRock, which we already know about. All of these shorts are shaking out the retail traders, and hopefully you're not one of those people. You've got diamond hands. Bitcoin has crashed from 124K to 10K, back up to 115K, back down to 110K, back up to 112K today as I'm recording this. It's been a wild week, but Bitcoiners with diamond hands are unfazed. And we're unfazed because we never sell our Bitcoin. We let our winners run and we never sell the greatest asset. And that's why we partner with Ledn, the leader in Bitcoin-backed loans, which allows you to not sell your Bitcoin, but unlock liquidity in your Bitcoin when you need some dirty fiat money. If you want a $2,000 fiat loan, well, you post $4,000 in Bitcoin collateral. And you can trust Ledn. When the crypto market crash and liquidations happened just a few days ago, there wasn't a single loan liquidated on Ledn. That's because they're all held in cold storage. There's a 50% loan to value max, and it's one of the most secure and trustworthy places that you can actually hold your Bitcoin. They've issued over $9 billion worth of loans since 2018 and have over 1,000 five-star customer reviews. Funds hit your account in less than 6 hours. The application takes less than 2 minutes, and there's no credit check. Loans start at just 12.4%, but you get 0.25% off your first loan by going to learn.ledn.io/simply. And another way is that banks can't manipulate your assets. Well, you don't hold them in an ETF. You buy actual Bitcoin from an exchange. You don't keep it on an exchange, and you remove it to cold storage in your wallet, where you protect the private keys yourself. Doing this is new, and it's not simple for people where this is your first time around. And that's why you should get a coach. Schedule a free 30-minute consultation with the team at thebitcoinway.com, the leaders in helping you to protect your generational wealth the right way. A coach will help you to remove your Bitcoin from exchanges safely, private, securely, and confidently. Don't wait. Schedule a free 30-minute consultation with a coach to help you on your road to sovereignty. The bank's plan is that they are able to use their unlimited funds, which they have no accountability and no regulation to stop them from doing so, to short and manipulate the markets. How is it that there's a slow economy, deposits and funds in the banks are down, but yet they're still posting record profits? They are the undisputed champs at the top of the fiat pyramid. Look at their earnings. JPMorgan earned $5.07 versus $4.87 from Wall Street, 46.3 billion revenue versus 45.5 billion estimated. BlackRock, 11.55% versus 11.31 cents. 6.5 billion versus 6.29 billion in estimated in Wall Street. Citi, 22 billion versus 21.1 billion. Goldman Sachs, 15.1 billion versus 14.2 billion. Wells Fargo, 21.4 billion versus 21.1 billion. They all beat, and they all beat by a big margin? Something's up here. Or is it that they can continually beat estimates? They control the analysts, they control the estimates, and they can print money. They get to borrow at rates that you and I can't. They get to rehypothecate the hard-earned money that you deposit ad infinitum, and then they lend to you at a rate that's profitable for them for all the things that you need, like a house, like a car. This is the game. And that's why we need an asset tied to energy to help us fight against it. In response to the macro and trading account Zero Hedge, Elon Musk, the richest man in the world, tweeted that that's why Bitcoin is tied to energy. Zero Hedge thinks that gold, silver, and Bitcoin are going to win because the government is going to print money in capex to fund these new investments, but But they can't actually print more Bitcoin. You cannot fake the longest chain. Jerome Powell, later this afternoon, by the time that you watch this video, will either have launched a neutral plan or communicated a neutral plan that rates are going to stay about the same, or we may go down 25 basis points, or he's going to announce that they're going to cut rates over the next two Fed meetings by 0.25% or 0.5 basis points as they continue moving forward, causing market prices to rise and increase. But what you need to understand and what you need to know is, regardless of what he says, they can't print more Bitcoin, and they're going to have to inflate their way out of this debt crisis. There's no other way around it. So while Wall Street's able to manipulate the prices of Bitcoin in the short term, causing retail and algos to influence the price of Bitcoin and make it go up and down and be volatile, well, you can stay calm and stack on. Your behavior is what's going to keep you from outstanding returns. And that's it for our show. If you haven't already done so, subscribe to the channel. And if you haven't already bought your tickets to the largest Bitcoin Mining Expo conference happening in Dallas, Texas from November 13th at the Mining Disrupt conference, then do so and use the promo code SimplyBitcoin for 20% off. This is Dante Cook with Bitcoin Simply. Happy stacking.